Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 27th of April. A few things to just highlight for this week ahead in terms of calendar. We got the US, or rather the UK GDP numbers out today, or rather tomorrow in the afternoon. And then on Wednesday, we have quite a whole slew of numbers coming from the US. Firstly, with the GDP numbers again, sometime in the evening here at about 8:30 in the evening. This is also going to be closely followed that same very evening with a Fed decision, excuse me, Fed decision with regards to policy going forward. As you see down here, the GDP numbers we are expecting. A forecast of around 1.1%, and this is actually coming off a 2.6% announced previous quarter, or rather in the fourth quarter last year. But essentially, the big moves that may be expected, that may come out from these big numbers or from these announcements, will be on the dollar and the dollar pairs. We've seen the US dollar over the last 3 months or so, more or less, rather the last month or so, 3 weeks or so, more or less flatten out after having moved quite a bit on the upside, gaining as much as about 20% since last summer. Several stocks which I think will be worth talking about. The first is Apple. Apple will announce results today after the market closes, and the market is calling for a rough estimate of around $50 to $55 billion in terms of sales. Now this is lower from the previous quarter, but this is a seasonal effect. At that sort of number, Apple still will be looking at a PE, or rather is only valued at a PE, as we see here, of roughly around 14, or rather around 14 times on a forward basis. So by no means stretch at all in terms of valuation. But if you can just look at the charts as we have here, you've seen that Apple over the last year or so has actually come up very gradually. This setup over here looks quite similar to what we have seen in the December, January, February sort of periods, where after a big move that we see here, a big move similarly here, okay, the stock has managed to consolidate over a 2-3 month period, and then it received a big boost after first quarter, or rather fourth quarter earnings that was announced in the first quarter of this year. That number was a big blowout number. As most remember, they came in with about $75 billion of profits, or rather of revenue. Highlighted the strength of the iPhone 6 sales. Now we saw the stock punch up convincingly on the back of that. Will we see a similar situation here? It obviously remains to be seen. Several considerations this time round. Obviously, you've got a US dollar drag on the earnings, which they also faced in the previous quarter report, but they managed to hedge a bit of that, and they've also shown that their biggest growth markets of China has a so-called non drag when the dollar is concerned, because of the peg that the renminbi has to the US dollar to a large degree. So certainly all eyes will be on these numbers tonight, and also people will be hoping to see what sort of updates they may have for the Apple Watch. Another stock that we are following on the local front in Singapore is this stock here called Costco. Costco is a red chip. It trades in Singapore just as its parents trade in the US, in Hong Kong under the A share banner. The stock punched up very, very strongly in the beginning of this month and has consolidated at a very, very high level. Now this gives a lot of confidence that if we see a breakup of these sort of levels around the 59 to 60 level, we may see I just want to pull up the chart here. Okay, we may see this thing pushing higher. Costco over the last 2 years or 3 years have actually come off precipitously. A key reason for that was because of their business. They are a traditional business of yard, of shipbuilding, ship repair, and also rig buildings. They managed to consolidate their business very well, and this move up down here has been led largely by a series of contract wins that will add to their business and their credibility in being able to go out down there and also appeal to the larger ship owners or the larger rig builders. So ultimately, we've seen this stock lagging far behind their parent, who trades up in Shanghai, both Shanghai A and also in HS in Hong Kong. We hope, we are looking obviously for signs that if this thing breaks up on the upside, we may see it punch through to closer to around these sort of levels, flipping this move. Alternatively, or rather conversely, a failure to do so will see them test firstly support back again at 57 cents here, and possibly coming back down. But just the name that we are closely following. Besides that, just the Singapore dollar, or the dollar Sing rather, we flagged this last week. We are seeing that it is being tested, or it is testing the lower range of their descending channel down, and it has broken slightly below the 38 level on the Fibonacci scale. Now, this was on the back of a big move because of the industrial production numbers that came out. We've seen this whole drive being brought down by a series of numbers, or strong numbers from the Singapore economy. This Wednesday's GDP numbers in the US may influence this pair once more from a US dollar point of view. So a few things that we are looking and following, and have a good trading week ahead. Thank you.